What is going on, everybody? My name is Mike. This is Wall Street Traders, where we break down hot trending stocks to put you at an advantage on the market. All right, so the next stock that we're breaking down for this morning is Beyond Meat, or ticker symbol BYND. We're starting from a higher time frame, that being the daily time frame. This allows us to apply multiple time frame analysis, prevents us from trading in a vacuum or ultimately trading blind. This also helps us find our support and resistance lines, our entries, and all that good stuff that we need to further predict our analysis. So let's go ahead and dive in, you guys. So pre-market, we're almost up 2% for the morning. The market will be open in about 10 minutes. So we closed yesterday at 132 and we're at 133 as of right now. So let's get to the technicals and the chart itself. So this top line up here represents our major resistance line. It's the highest area that's been tested multiple times, where candlesticks have either been rejected or reacted in this area. All the way down here is our major support line, where it's the lowest area that's been tested, where candlesticks have either been rejected or bounced off of this level. And then this middle line just represents this minor, as of right now, support line that we're using to further predict our analysis. If we needed to, I could go farther back in time and show you how we bounce off these levels over here and over here. And on the opposite side of our resistance, working as support, we can see we bounce over here and over here. We have all these tops on this level, and then ultimately under here we have this resistance. So these areas can be tested. If you need more prior price action movements, you can always go to a higher time frame, and you'll be able to see these a little bit more clear. So on the weekly time frame, it looks a little bit more clear than it does on the daily, but I use the daily because it's just more information that I can use. So as of right now, like I said, we're at the 133 on pre-market. And we're under this trend line, so that's not really a good sign. It looks like we're pulling back to this minor support line. So if you wanted to get in, it would be around, the best area personally would be around the $124 or $125 area. Have your stop loss maybe below that, the $120 level. So if we do drop below this minor support line, we know to get out and wait for a better entry, and that better entry would be all the way back down here at our major support line, and that's at the $71 or $72 area. So that's a big drop if we do break below this minor support line. But overall, we've been kind of consolidating and chopping around in this level, so we'll see how this holds up. If we do pull back down to this level, like I said, the 125 area would be the most ideal entry to get in, and have your stop loss, like I said, below maybe these candlestick wicks and these candlestick wicks, just in case we have a candlestick wick that peekaboos below that level. We don't ultimately get tagged out immediately if it does decide to go higher. So like I said, getting in right now at this moment would be pure FOMO. It does not make sense just to jump into something that you do not understand. So that's why I'm here to kind of break down these charts and make sense of exactly what you're looking at. Like I said, FOMO will hurt your account. And then the other alternative, if we do turn around and break this downtrend that we're in, and we come up and hit this major resistance line, the other alternative entry is to wait that we break above this $145 level, and to break above that and to come back down and retest it as a floor. Then that would be another alternative or entry to get in about the 145 area if we do break above it, and then have your stop loss on the opposite side. So if we do break below that, we know to get out and wait for a better entry, like I was saying previously. So those are the two entries that I see as of right now. More than likely we'll pull back down to this support level, and from there I'm not 100% if we'll either bounce or retest this level and fail and break below that. So, but either way, that would be the ideal entry to get in on this specific stock. Let me go ahead and check the volume real quick. We're at 9,000. Hopefully that picks up, because usually you guys, you want to trade anything that's at least above 150,000 volume. Anything below that, stay far away, because you're basically going to be trading something that's such a slow moving stock that you're not going to be able to hit your target or your exit or anything that you're trying to go for within that day period. Not saying that the volume can't pick up throughout the day, but generally when you're scanning stocks, you're going to want to find something that has a higher volume to get you in and out of that stock. And this also depends on the type of trader you are. If you're a core trader, obviously these things won't matter because you're going to be holding for the long term. But as for you swing, day, or scalp traders, this is ideal to find as much volume as you can. And like I said, even on the RSI, we have these double tops that we can see and that we're starting to pull back. And we're not really oversold or overbought yet. But like I said, the more ideal areas is back down here at the 125, or if we can break above the 146. So if you guys like the way I break down these charts every single morning for you guys, please hit that like and subscribe button. It means a lot to me. We're almost to 2,000, you guys, and it just allows me to create this every single day for you guys. But other than that, I hope you guys have a beautiful day and happy trading.